All right, everyone. Got a little bit of the thing when you set the live streams in advance. Of course, the bear break that I've been waiting for the last hour and a half is taking place right now. So I'm just exiting some positions, taking a bit of profit, and was shorting SPY a little bit. We can see SPY just rolled over a little bit more convincingly. Watching for that hourly consolidation, which is now underway. So hourly lower high set. A little bit of a rising wedge I was keeping an eye on. And the biotech sector had a really nice double top by 4 pennies into a pullback. So taking off some biotech short. Let's see. That went well. All right, so I'm going to hold my SPXS position for hourly consolidation. And that's good enough. We'll take it from there. All right. Appreciate everybody tuning in. Thanks for the likes and all the good stuff. We're going to look at CPI reaction and, of course, how crypto is reacting and how the stock market is reacting. We only need one window here. All right. So S&P 500, we had the bearish reaction to the CPI numbers this morning. Certainly a very convincing bearish reaction. And we have had the same thing play out 3 days in a row. And what has played out 3 days in a row is a morning flush waterfall drop. We're going to go to SPY just because it's easier for me to find it. But 2 days ago, what's today? Wednesday? So on Monday, we had the waterfall drop for 20-25 minutes. We then bottomed. That marked the low of the day. We bounced for hours to set an hourly lower high and then rolled over into the close. Yesterday, drop on the morning, 25 minutes. That marks the low of the day at that point. Multiple hours of bounce, hourly lower high set, roll over into the end of the day. Flush on the CPI numbers, that marks the low. Many hours of a bounce, hourly lower high set. Are we going to flush into the close? We're certainly pulling back into the close. Question is, how much drop are we going to see here? And I would anticipate that the most likely scenario is an hourly higher low due to the size of this bounce. Again, the S&P 500, the bounce retracement at this point was 70% or so. So unless we just absolutely roll over and dump here, I'm anticipating an hourly equilibrium is the most likely scenario. And I'm going to be looking for an hourly higher low compared to the low of that reaction. So we have a really nice, clear hourly tightening range. And again, as I mentioned, over the last 2 hours, I've been pretty much just flipping and positioning for the inevitable hourly consolidation. And now I'm going to be watching for bulls to shape up an hourly higher low. But giving the bears a bit of a chance here on this pullback. So that's where we stand in the broader market. Okay, that's zoomed in. So that's our CPI reaction. When you see a big enough pullback and then a big enough bounce, you know we're scouting an equilibrium. That's the most likely scenario. As soon as that bounce goes 50% retracement plus, we can say we're scouting equilibrium. We're still going to scout a lower high compared to the high of the bounce. I should say the high of the initial reaction, just because of how far away it is. But it also created a whole bunch of space for an hourly higher low. Let's zoom out. So that's the hourly. The daily defended support. Bulls have now almost a quadruple bottom on the S&P 500. And again, whether we're using the S&P 500 or the NASDAQ, they're fairly similar. We can see the NASDAQ is a bit stronger. We did not get as close to that daily support. So we just have a good old-fashioned equilibrium right now, both on the hourly and on the daily. We need an hourly trend change to the bulls to be confident a daily higher low is shaping up. Other fundamental events that are going to impact the direction this equilibrium breaks on the daily time frame, financial sector earnings. So XLF, the financial sector, is one of the major sectors in the stock market. Look at it bounce right off support today. Earnings start tomorrow pre-market and then Friday as well. And it's the start of the entire stock market's earnings season. The financial sector goes first. So it's a little bit of a taste, and we're going to see all of the financial sector react. I'm watching XLF very closely because the direction that it breaks its tightening daily range is going to impact the direction that the S&P 500 and the NASDAQ break their tightening ranges. But with how we are setting up, if we see the hourly trend changes to the bulls from here, it's entirely possible we remain within these tightening ranges until next week. So bulls played defense this morning. The question is, can they confirm the hourly uptrend to make it convincing? So Bitcoin's reaction, actually let's go to the dollar. The dollar is pulling back a bit, though not significantly. It's a potential daily bull flag at this point. Hourly bounce is just looking for a lower high. So daily consolidation underway, but still extremely healthy. So just keeping an eye on that. We know that it would benefit stock market and crypto bulls if the dollar were to see any kind of meaningful weakness. But right now, there's no meaningful weakness. It's very healthy daily consolidation. So Bitcoin, how do we react? Very similarly. What's the biggest difference? The size of the bounce. We got all the way back up to that high. There was a little hourly trend change mixed in there, but if you go to the 2-hour time frame or the 4-hour time frame, we failed resistance, and now we're pulling back with the broader stock market, and we're just tightening up within that range. So we had an initial pop, big drop, failed to break the high. Bears certainly top fishing that resistance level and looking to tighten up within this range. That being said, it's the same thing. Again, we're doing the same thing as the stock market. We held daily support. Key daily support was 18.6, and we dropped down this morning to 18.9. So just like the S&P 500, just like the NASDAQ, came very, very close to breaking daily support and held it. Bitcoin did the exact same thing. So we need Bitcoin bulls to break the high of that reaction, which is 20.1 thousand, if we are going to say that's a daily high or low. And if the bulls pull off the daily high or low, guess what we look for then? We then look for a daily low or high. Anything under 22.5 thousand. Same thing with the broader market. If we hold these daily support levels, we can still form a lower high and continue to tighten up. So right now the bulls are just hoping to hold support, confirm some short-term uptrends, set the daily high or low, and continue to tighten up into the weekend. Bitcoin divided by the NASDAQ to show us relative strength and weakness came right down to support. Again, as long as we're in this channel, we're just doing the same thing that the broader stock market is doing, and that is remaining the case right now. We've been within this channel now for a month. Just under a month. Bulls want this to follow through to continue tightening up with the US dollar pairing of Bitcoin. So tightening up. Bulls have proving to do short term into tomorrow for us to say, yep, daily higher lows set, continue tightening ranges, looking for a break later on down the line. So that is my clarity for markets right now. Ethereum bounced right off support on the daily. 997 was support. We bounced off 1005. Came right up to resistance. Have not broken it. Have to break it. If we're going to say yes, that's our daily high or low being set. And then we scout a daily low or high, anything under 1276. So bulls are attempting to play defense. They have to go on a little bit of offense to remain within these tightening equilibriums. ETH BTC holding daily support, just barely. Have to see this bounce follow through to continue the equilibrium. Tightening ranges galore. What do tightening ranges tell us? Number one, slow down your trading. There is less opportunity in a tightening range than there is in a breakout or breakdown range when you're seeing more price discovery as far as new levels being hit. So for me, it means trading less. It also means get ready because volume and volatility are coming when these ranges break. So it means slow down, but also get ready for that inevitable break. Bears are comfortable. if I'm a bear right now, let me put on my bear glasses. If I'm a bear, I'm looking at this and saying, well, okay, we've had a great last 4 days. Worst case scenario, we hold support and we bounce and I look for a daily lower high. So the only way there's going to be pressure put on bears is if these sideways ranges break bull. Anything less than that, and bears remain comfortable with these daily lower highs. I know Bitcoin was a higher high just barely, but a ton of altcoins are still daily lower high patterns. Other names. So we were looking at ICP. I'm watching this 4-hour falling wedge. And I got to adjust my lines a little bit here, but I drew this 2 days ago. So what we're watching for is ICP to give us a daily higher low. It's been pulling back for 5 days. It's still trying to hold EMA support. Again, bears are top fishing the reactions initially from the CPI. If we reject, we look to pull back and form a higher low. I'm probably going to be on 2-hour time frames. I don't use 2-hour time frames often at all, but that is where I am finding clarity. If the bears do follow through with the pullback, I'll be scouting a 2-hour equilibrium. But just a nice visual guide here. This pattern has to break bull for the daily higher low to be set on ICP. And there are names that look very different right now in crypto. As far as the daily charts, you look at Matic here, and this daily higher low attempt is so much stronger than Waves. Look at Waves. Waves saw a daily lower high and lower low. We could see that Waves was one of the weakest names on our 2-day bounce, as it did not get anywhere near 728 resistance. Lower highs and lower lows continue for Waves. That is a very different look than Matic, which is potentially setting that higher low now. Still have some proving to do, but keeping an eye on that higher low. Ape also dropped to a lower low. So again, any name that dropped to the lower low stands out as weaker as any name that is holding that higher low. Sol is holding support, but it did pull back a bunch. So Matic is showing us it's a lead bull due to retracement size. Again, the retracement size that we saw from that last low, 50%, whereas most names pulled back 75% plus. So there's a notable difference between a lot of individual crypto altcoins. And again, the way that I use that information, I want to identify 2 names that are clearly standing out. This is the way I would do it. 2 names clearly standing out as lead bears, 2 names clearly standing out as lead bulls, and then depending on what Bitcoin is showing me as the most likely scenario, that's the direction that I trade those altcoins. So if I'm looking to bottom fish off of Bitcoin support of 18.3 thousand, I'm looking to one of the stronger positioned altcoins to play that bounce. And if I'm going to be scouting a top fish on Bitcoin's resistance test right now on this high, I'm choosing one of the weaker names to be going short. You could trade Bitcoin itself, but if you're looking for more volatility, obviously the altcoins have it. So again, going down the list, the BTC pairings obviously help us. And we can see Waves BTC daily chart is very weak the last bunch of weeks. And Matic BTC daily chart is up near the highs. Again, they are very different setups. And it's similar to the stock market. Right now, the stock market is trading in this little sideways range near its lows. Growth names have been bouncing for a month. They have been the leaders of the bounce. Other names have been much, much weaker. But you can't look at the broader market. I mean, you obviously can look at the broader market and say it's bullish or bearish. But that's such an overtone. That's such a zoomed out perspective. Because there's bullish sectors and there's bearish sectors. And it's the same thing in crypto. Yeah, crypto's bearish, but that then lumps a name like Matic with a name like Waves. And again, they're doing 2 completely different things over the last month of trading. So as traders, we can't be lazy and just identify the market as a whole with one word. We are going in there with the microscope and the magnifying glass. And we are identifying much more detailed analysis of who is weak and who is stronger. And again, it always goes back to the base of what is the broader market doing, because in this day and age, the correlations that we see with automated trading are so significant. But there are names that are positioned really well for bulls, and there are names that are positioned really well for bears, and those are distinct differences. So again, use those BTC pairings to help determine who is who. LTC, BTC has to change the daily trend to the bulls for a weekly higher low to be set. So there's a lot fewer lead bulls than lead bears. Because the entire space as a whole is weak, there's obviously a lot more bears. But again, there are individual names holding on much better. Just boot him. Luciano's too nice. If anybody spams, it's an auto boot. Get out of here. All right. So what do you all want to look at in terms of coins or any questions? I'm still being extremely patient. You know, I've got a little bit of bull exposure. The percentage of my account that is cash is over 90%. I will absolutely look to buy another fear flush patiently, but that is definitely on the table for me. And otherwise, I'm just patiently waiting for this tightening range to resolve itself. So I have not done much at all in the last 2 weeks of trading. Is there any way around the pattern day trading rule? So there are ways around it, trading options, but options are very tricky, and I would suggest paper trading them for a long time to get used to them. Sweetie Pants wants to go outside. So I would suggest paper trading for a long time to get used to them, but there are ways around pattern day trading with options. But if your account is under $25,000 and you're subject to pattern day trading, then your hands are tied a little bit. And back when my account was under that level, I was swing trading more and eventually got it up over 25,000. And then I started day trading. And of course, then I would go below it a little bit and above it a bit. And it was a battle around that level. I have this distinct memory burned into my brain from 12 years ago, maybe less, 10 years ago, where I can remember Fidelity calling me and saying, you have dropped below the blah, blah, blah level and pattern day trader, blah, blah, blah. And that's when I learned what that was. But it is definitely a disadvantage. And it's a dumb rule overall, but it's the way that it is. So we got to deal with it. But I would suggest swing trading more, honestly, or just being really picky. Split up your capital into thirds. If you've got $15,000, use $5,000 in one day, and that's it. You know, be really picky. Maybe take one or two trades, and then you have your next $5,000 the next day, and then your next $5,000 the third day, and then by the time you get to the fourth day, your cash has settled, and you got that $5,000 back. Link. So Link has been positioned fairly well. So the first thing I do is I go to Link BTC. We're in a daily downtrend, but we are scouting a weekly higher low. It's very similar to LTC BTC. As far as the daily time frame, we dropped to a lower low. So it's one of the weaker names. Every single bounce has given us, aside from 6 pennies there, it's given us a lower high. So we had a double top, lower high, next daily bounce. We can bounce 10% from here and still just be a daily lower high. So keep it simple. We're not going anywhere for the bulls if all we do is set a daily lower high every single bounce attempt. So any name that broke the low from the end of June is weaker than the names that have not. And we're just looking at our fear low of support down at 541 and 530. Anything under 684 is just a lower high. XTZ, looking for a daily higher low, anything above 133. 4-hour trend change back to the bulls needed. Bulls need to get back over 150. And then have to be cautious Because again, we can bounce 10% and still form a daily low or high, anything under 171. This is a possible weekly bear flag. So, a daily trend change did occur, and it had zero follow through. Same as Bitcoin. When you change a trend, whether it's you change a trend bearish with zero follow through or change it bullish with zero follow through, you zoom out and you scout a flag. So right now the burden is on bulls to prove to us that this is not a bear flag. And to do so, we must break the bounce high. Checking the BTC pairing. Fairly choppy. I don't see a ton of clarity on this chart, but I do see a potential rising wedge to be keeping an eye on because the bull breaks lack follow through. So a big red flag for XTZ bulls would be if we bounce from here, set a lower high, and then lose the daily uptrend. So this is a pattern to just be keeping an eye on. There are no red flags on this chart at this point, but if this pattern breaks bear, that's a red flag. So I have to be keeping an eye on this for XTZ. DXY, local top, can't say. Can only guess. And right now, we need an hourly downtrend confirmed. We have not seen an hourly lower high and lower low at any point. This is a big drop, no lower high, lower low. Even this big drop, no lower high, lower low yet. We have to see bears prove to us follow through by confirming downtrends. Big drops are great, but you have to confirm the lower high, lower low for conviction and follow through. So I look at this daily chart for the dollar and I say that's a daily bull flag as long as EMA 12 support holds. And that EMA 12 is not even close to being in the picture right now. Stock bulls are buying the dip here. So SPY trying to keep this consolidation healthy, trying to form a very quick hourly higher low. How is Bitcoin responding? Not very similar. Bitcoin has a bit of a different setup right now because the hourly is really nice and clear on our stock futures charts. And Bitcoin, it's almost like Bitcoin's a step ahead of the game where our stock futures charts are pretty much right here right now. Our hourly lower high was set. We're now trying for a quick hourly higher low. But Bitcoin bulls are liking the fact, obviously Bitcoin bulls want to see the S&P 500 and the NASDAQ very quickly set the hourly higher low and try and confirm the hourly trend change before the end of the day today. That would definitely be a win for the bulls. What about long-term bull exposure? The only long-term bull exposure I have is no touch positions. So I don't do anything with it. No touch means no touch. Options settle faster than common shares is one of the workarounds. I forget the exact intricate details of the workaround with options, but there is a workaround for the pattern day trader. I'll have to refresh my memory for the exact details. ICP is a potential for that 4-hour falling wedge. SPY only gapped down this morning. It didn't gap up. We gapped down after the pre-market bearish reaction to CPI, and then bulls bought the dip on the gap down open. As we know, a general rule of thumb, gap downs are for buying, gap ups are for selling. Not every time, obviously, but more often than not. If you force me, you got to choose a direction and you show me a gap, I'm going to choose the opposite direction of that gap, just for probability's sake. GMT. So GMT is trying to set a daily higher low compared to 763. If we break the high of this reaction, then the daily higher low will be shaping up. We're not close to that resistance. So how many altcoins did we just look at that were trading up here? A lot. GMT, that means the probability of a lower high compared to 889 is more likely than a lot of other coins. Again, 2-day time frame if we want to, or 2-hour time frame to condense it down. Scouting a 2-hour lower high compared to 889. And then we'll scout a higher low once we top out compared to 880 cents. And that has to break bull if that is indeed what we get. That has to break bull for the daily higher low. And then we scout a daily lower high, anything under 106 to continue the tightening range. So burden on bulls to prove the short term, to prove the daily higher low is set. So this is a good question in terms of if I'm looking to short an alt, shouldn't you short the one that has strength versus Bitcoin instead of the one that is already perhaps showing weakness? No. The only time, yes, is if it's a top fishing play where a resistance level is very close nearby. So for example, GMT, if I want to look for a bearish entry right now compared to the high of the initial reaction to CPI, if I'm looking at GMT, my stop is too far away. That's 5% before we get to that resistance. Ethereum is stronger on this bounce as far as getting right to our resistance. So I would say on this bounce, ETH is stronger than GMT. But look at the risk reward. This was a clear top fishing play where you're risking $5 to $10, which is 1%. So if I'm risking, I can either risk 5% to try and short the weaker GMT, or I can risk 1% and try and short the stronger Ethereum. That's the only time where I will look for a stronger name to short if the risk and reward profile of the trade setup is more favorable. If there's more clear levels nearby to be going off of, essentially. Still got a lingering tickle in the throat. Bitcoin does often mark a bottom first and lead the way up, and then we see confidence from that seep into the altcoins, and then they follow. That happens often when we do see significant bottoms being set. So would it be better just to stack Bitcoin? I'm answering a question here. Would a good strategy be to stack Bitcoin now and then buy alts after the big run? Maybe. Honestly, it's difficult to say. There will be altcoins that outpace Bitcoin on the way up. Absolutely. But the question is it all altcoins or just a select few? So I would say it depends on how actively are you trading, how much experience do you have trading, because I know certainly the professional traders that I know of wouldn't just do that. That would be that's too zoomed out. But that's up to the individual. And if you're looking more passive and more swing trade mindset and not actively trading, then that is one way to approach it. But you would need to ensure that the dominance chart remains strong even in the face of a strong crypto move. So if Bitcoin were to break its equilibrium bullish, you would need to see the dominance chart going up to tell you, yes, you made the right decision. Bitcoin is leading this bull move. Very impressive dip buying by the S&P 500 right now. They're trying that hourly higher low real quick. You can make the argument that Bitcoin is Wyckoff accumulation, but that generally would mean a bear break into the spring. Spring, not the season. Spring being the bounce after the bear break. And there have been times where that has happened, like back here. Tightening, sideways, tightening. And we didn't break all support, but we broke most levels into a bounce. So something to keep an eye on, but again, that's the kind of pattern where, you know, you have to be cautious that you're not just having a bias blind you to all the trends. Because essentially, if you're trying and hoping it's going to be a Wyckoff accumulation, you just need an exit plan. Because again, we are in a downtrend on every single time frame for Bitcoin right now. As far as monthly, weekly, daily. I mean, daily is a bit ambiguous, but as far as I'm concerned, it's still a daily downtrend. I'm just calling that a double top. So you have to have an exit plan. Because next thing you know, you get the bear break. Oh, it's Wyckoff. I'm making my entry. And then we're down under 15,000. You know, where's your exit plan? So when playing counter trend, have to be real careful and have to manage that risk. And the only way to survive these bear markets is by managing your risk. Certainly, as you all know. We'll look at the biotech sector in the after hours video, as we always do. SPY gapped down this morning. Do I think bulls test 382 today? Absolutely, it's on the table. The size of this bounce the last half hour is very impressive. We need a 5-minute trend change back to the bulls in SPY. Security on a no-touch position. Guns. Thanks, Inti Ferrino from Bolivia. You got it, Chris. Correlations have been a game changer for me over the last 3-4 years of trading in both stocks and crypto. Absolutely. QQQ definitely has enough room. Well, I wouldn't call QQQ a 15-minute high or low. We're looking for the hourly high or low on QQQ. XRP. Broke daily support, so we know it's one of the weaker names. Next time we bounce, anything under 359 is just a lower high. We can bounce 10% from here and still be in a daily downtrend. Bulls have a lot of proving to do. As long as daily lower highs keep forming, bulls are not going anywhere. Have to break the daily lower highs. Am I ever concerned about the crypto market and government and WEF intervention? Absolutely. I mean, there's tons of unknowns. That's why it's only a smaller aspect of my net worth as far as capital that I will leave in crypto. For the most part, I am liquid cash and trading. Can I look at Tesla? We'll look at it at the end of the video, end of market video. Every day we look at Tesla. So again, all these requests that I keep getting, we cover them every day. It's just you gotta wait 90 minutes. Well, I guess it'll be 2 hours, but every day, put out those daily videos. S&P 500, NASDAQ, the whole deal. I go over some trade review. And again, these days, honestly, aside from going in depth and looking at the altcoins, who's standing out stronger and weaker, I mean, the broader market has us covered. The analysis that's going on there is the same as what's happening in crypto. Hey, from Argentina, Andres, we've got KDA, so daily downtrend, dropping to the lower low. This was a nice tightening equilibrium. It broke bear at 161. So just a higher low, lower high pattern. There's your bear break. Currently, 134 is support. Certainly some relative strength today. Bears are trying to defend 158, the top of that move. If bears follow through from here, we'll have the 2-hour equilibrium to be keeping an eye on. If the bulls break this tightening range in their favor, anything under 169 is just a daily lower high. So again, another name that can go 10% from here and still be in a daily downtrend. We must break daily lower highs if bulls are going to put any kind of pressure on shorts to cover. There are shorts that are in swing positions right now that are just saying, I am not going to do a thing. If every single bounce is a daily lower high, I will continue to swing this short. So the only way you put pressure on those shorts is by breaking the daily lower highs and changing the character of the chart. It's one of my new phrases. What is the character of the chart? If nothing changes, didn't have a drink next to the computer. That was a mistake. If we don't break daily lower highs, the character of the chart does not change. If the character of the chart does not change, the bears remain extremely comfortable. All right, I'm done talking. I need water. I appreciate you tuning in. Watch how the stock market closes. Watch if bulls can confirm that hourly trend change. If they do, the probabilities increase for a daily higher low and continue tightening range, which is what the crypto bulls are hoping for at this point. Just give us a daily higher low and tightening range into the weekend. Appreciate you watching. Do good things.